Hey guys, Mike here. So yes, it happened, which means certain things did happen yesterday and today, and that's what we're going to get into because this will affect SoFi stock as a whole and really steer it to where it's going to go until we can get earnings, which is next month, of course. And so we're going to get into all of the news on that right there and point out a few key things you really need to pay attention to. And speaking of news, if you're not already signed up for this, make sure you sign up for the Daily Upside. It's completely free. It's a newsletter you get. As you can see, I'm scrolling through it every day. I go through this, and it keeps me updated on what's going on globally and locally as well, and a lot of market ideas, trade ideas, investment ideas. All you got to do is hit the link down in the bottom right there, put your email in, hit submit. That's it. That's all you got to do. Completely free. It doesn't cost you a penny. There's no catch to it. So make sure you sign up for that, and you'll get some fantastic news every single day. Okay, guys? And so let's go ahead and get into it. And we'll start off with the chart because this is key right here to what you're going to see happening with SoFi stock. And of course, like I talked about last week, what is the main thing that happened here is earnings, right? I said PayPal and Lending Club, right? Well, what happened? Lending Club had really good earnings, by the way, up 17% last night, and then it sold off this morning, kind of made a nice comeback. PayPal it was very questionable earnings, actually downgraded their forecast, stuff like that. But you can see all of these traded up, just like I said they would if this happened, and they would have traded down if it was bad. And here is one of the keys you need to watch out for, because what did I tell you what's happening? What everybody's saying? We are in a re-rating period for all tech stocks right now, okay? Which means they're bringing the prices down. You can see it right here. Remember, Lending Club had very good earnings. Because trust me, I showed people last night some of the earnings on PayPal and all these others, and they were so mixed. It was crazy, but I guess the bar has been set so low, i.e. we're re-rating the price of these stocks. You can see it right here in Lending Club and PayPal. And over our friend at TipRanks, again, links in the bottom if you want to sign up for this service right here. You know, if you look right here, we already looked at SoFi, right? Nothing, no re-ratings going on as of last week or this week. But then you go into Lending Club, what do you got? Two people came out yesterday, one put a hold on it, one still has a buy at 26, but you see no price increases on this whatsoever. And then the guy below had no remarks. But if you look right below that, look what the price targets were on this stock, right? And then we go to our friends at PayPal, and we'll see what happened within. You can see right here as we scroll down, you can see yesterday what happens. You end up getting a hold, a sell, a buy. But what do? They lowered the price targets on PayPal, right? They went from 212 to 138. Even though they still give it a buy rating, that is a huge drop. 173 to 118, 185 to 140. And so, and if you're getting out of this, guys, please hit that like and subscribe button for me. And so that'll give you a good visual of what's happening, whether you have mixed earnings, good earnings, doesn't really matter. This is all a re-rating system. It has nothing to do with one particular company in general. It has to do with the market overall. So keep that in mind, when you're getting depressed looking at your stocks go down or whatever it is, that it ain't just your stocks, okay? It's the whole market right now, except for, energy is kind of hanging on in there, but eventually that's going to take a dive. Commodities are going to take a dive eventually. But, now, looking at the charts, what do we see going on with SoFi in particular? And because their chart, let's be honest, it's a hot mess right now. As you can see, this is on the daily here. And, why do we get a bump? Look how I oversold this stock, not only this stock, but most stocks for the market in general, right, on the RSI down there. And what happens when it gets down to this level? It normally takes a move up. And then going into the hourly, you can see as you go down, there is no level of supports being built up. It's just kind of going straight down, new low, new lower low, new lower low, new lower low. And so finally get this pop, and more than anything what this stock needs is to consolidate somewhere. I don't care if it's at 6, 650, 7, whatever it is, just start consolidating and building out that support level, okay? Now here's some good news. One is where they live off of their website, right? Their website traffic is key for them to grow. And so, because they look for the younger consumer. So what it is, here's from Q1 2022, which has not reported yet, compared to Q4 as of now. And it's about a 52% growth rate right now in their traffic going to that website. And so that's a good thing, because obviously if their website traffic was decreasing, that would be a bad thing. And so that's how they live, right? I don't know if you get the stuff in the mail or emails saying sign up for SoFi. I know I do. And so, they're definitely marketing hard, trying to push people to that website, okay? Now, some I'm going to bring up, and the reason I'm bringing this up, because this gets people all upset in the comments, and people take it personal. It's not personal, okay? I'm a stock owner in this company, but it's something we have to watch out for. And the reason why we have to watch out for, because in times like this, throughout this entire year especially, this is what you're going to be feeling the pain from, this one particular thing more than anything else, okay? And it's the dreaded stock-based compensation, right? And people hate to hear that. And, understand everybody has stock-based compensation, but I thought this was interesting. And Palantir was the poster child for this for a long time, right? Always been talked about. But you can see in Palantir, there's been going down since, Q3 of 2020. Well, what has SoFi been doing? Their stock-based compensation has been going up. And so that simplifies that graph. The reason why this is important is, people say, well, why do you talk about this? Is because they're not in line with their competitors, right? And we just talked about Lending Club, right? This is revenue growth, 1 year percentage, right? Lending Club grew by 157% when this was made by Business Coin up there. And yet their stock-based compensation compared to revenue is 8.2%. PayPal grew their revenue by 18%, and they're an older company, and their stock-based compensation is 5.4%. Upstart, which we didn't even talk about yet, 263% growth in revenue, and then you compare their stock-based compensation to 8.6%. So you can see it's just not even in the same realm. And the reason why that's important as a shareholder is not to be bearish or anything like that. It's a fact of what's happening is we're gonna feel it this year, right? Because this is a year of re-rating. Price targets are coming down. Stocks like this companies like this are under a microscope, right? A lot of debt, not profitable, and so they're gonna be held to a different standard and punished, even more on earnings calls and things like that. But it's kind of sucks to see your executives taking even more stock-based compensation in a year like this, right, where they're having to actually guide down for the year because of what happened with the student loans and stuff. And so we're going to feel it. So so I'm just telling you, if you see the stock keep going down and some people aren't attracted to it, one, because of that, that can be a reason for that. In good years, compensate yourself all you want with the stock-based compensation. But when it's going to be rough years, to me, lead by example means, we're going to level off our stock-based compensation because we don't want to dilute our shareholders. And so I'm keeping an eye on this. I haven't heard anything, the CEO, saying anything about this. I've seen people hitting him up on social media and stuff saying, what's the deal with this? And again, if you're in line with your competitors, that's fine. If you're not, it's a problem, okay, especially in years like this. It's the only reason I bring that up. So I know people will get heated in the comments and stuff. Like, oh my God. But, that's just the way it is. And so just want to put that out there to you, understand other big earnings are coming out. I'm reporting this right now. The stock market just did a big swing today. We'll see how Amazon, Apple, Roku, all these other stocks come out. But if they come out good, and the market lifts, you're going to see SoFi and all the rest of them most likely go right with them. Here's a one bright spot too. After seeing yesterday's earnings, which I did a video on, I'll put it in if you didn't see it, and PayPal's earnings, the bar is being set so low now that good thing is I don't think you're going to see SoFi punished anywhere near as much if they come with mixed earnings, right? And if they beat and they don't guide down anymore, the stock should actually either stabilize or go up, okay, if PayPal was able to do that. So anyway, just want to put that out there to you. Hopefully you got something out of it. Hit the like, subscribe button if you did, and I'll see you guys later on.